Good morning, traders. Richard here. Quick Ichimoku cloud chart market review of the Nasdaq Composite Index, Nasdaq 100, Nasdaq equal weighted, and the Nasdaq excluding tech. Nasdaq 100 excluding tech. Some significant risk factors there that we've highlighted in the previous video. As mentioned in last week's update, we were hitting these upside level targets. Fibonacci extension targets didn't quite get to our 27,001, consolidating out, doing a much needed consolidation as we expected, a bit of a pullback in the market because it's become very extended from the top end of the Ichimoku cloud. The standard line support there didn't hold for very long, and there's downside risk towards the standard line. The standard line can level out here at 24,000, so we could see the market drop back down to 24,000. We'll look at the Fibonacci retracements in a minute. So there is consolidation risk back down to these critical levels, the standard line of the Ichimoku cloud, and then we can expect the rally to continue from that zone. Nasdaq 100 index hit all our targets to the upside, a full 100% Fibonacci extension, 29,475. The other one is 31,521. That's much further away. Do expect some form of a consolidation and then another attempt at the next upside target of that move. Once again, the standard line is the critical support zone to watch. It could be leveling out here at 26,175, the top end of the front end of the Ichimoku cloud. So that's the downside risk is to 26,178 in this current rally, but we are below the turning line of Ichimoku cloud, so that's not the best situation to be in. You can see the turning line became quite a support zone on the way up, so now we could see a consolidation back down to the standard line, so keep an eye out on that one. The Nasdaq equal weighted index also hit our upside target, the 61.8 Fibonacci extension target, 9643, pulling back to the turning line Ichimoku cloud with downside risk towards the standard line Ichimoku cloud that can level out here at the 9,053. So far it's good to keep an eye out on the equal weighted health of the market as well as the normal Nasdaq 100 and Nasdaq Composite. But the risk factor here is really in the Nasdaq excluding tech. We're not in a bullish state there. We're still bearish. We've been bearish since March basically. When it's slashed to the bottom in the cloud, price action below the cloud is bearish from an Ichimoku cloud chart perspective. So there's downside risk towards this low in this market. For this market, for the Nasdaq 100 excluding tech index to be bullish, we need to be back up above the top end of the cloud. So that's a big risk factor in the market. There is, if you delve deep into the underlying market components, there's significant risk in the market that there are sectors and stocks that are not participating in this strong rally in the tech sector. So these are the levels to keep in mind. There's big risk factors as highlighted by the Nasdaq 100 excluding tech. Let's just go and take a look at the Fibonacci extensions here and retracements. We've done the extensions. Now let's look at the Nasdaq Composite retracement. If we look at this move from this low here up until that high, the Fibonacci extension to look out for is this 25,293, is a 23.6 pullback. That is a normal healthy pullback, and by that time we do expect the standard line to catch up to that side of the market, so keep these levels in mind. A 38 extension would be quite a strong healthy correction, 24,413 to the downside here, but at the moment the market's still very extended from the top end of the cloud, so we do expect some form of a retracement back down to this Fibonacci level, 23.6 on the Nasdaq Composite. The Nasdaq 100, that level to watch out for is 28,000 on that one, and we do expect the standard line from the Ichimoku cloud to pick up and catch up with these levels. So overall, a healthy market, looking for a healthy pullback, a normal kind of pullback, a Fibonacci level pullback, but the risk factor once again is in that Nasdaq 100 excluding tech index, which highlights there is still some significant risk under the bonnet in the current market. But so far so good. Strong market rally after the base breakout on the Nasdaq, for example. And then we now expect a healthy correction back down and then another attempt at the 27,000 upside target. Thank you for watching. Until next time, happy cloud chart trading. Bye for now.